It's Tuesday night in the garage, bay doors open, concrete still warm, and every screen in here looks like a dashboard lighting up at once. Not because something broke, Weiss, but because the market just realized the roadmap is being rewritten while we're already at speed. Today wasn't about earnings, it wasn't about inflation, it wasn't about crypto doing crypto things. Today was about power. Greenland, NATO, trade routes, and who controls the lanes everyone else is driving on. Let's start there. Trump comes out and says NATO will be very happy with the Greenland outcome. Then says the US might scale back its role in Europe, then reminds everyone that without the US, NATO isn't very strong. Oh, and casually adds that taking back the Panama Canal is sort of on the table. That's not policy talk, that's leverage talk, and markets understand leverage. That's why the Dow dropped 870 points. That's why the S&P fell 2% and erased its 2026 gains. That's why over $1.3 trillion vanished in a single session. When trade routes, defense alliances, and shipping lanes get questioned, capital doesn't wait for clarification. It slams the brakes. Now layer earnings on top of that chaos. Netflix beats earnings, beats revenue, and still drops 5%. That tells you everything you need to know. This isn't about good news, it's about uncertainty at speed. And crypto didn't get a free pass. Bitcoin traded down to 88,803. Ethereum around 2,951. Solana near 126. Not because crypto failed, but because when funds need liquidity, they sell what's liquid. That's not fear, that's mechanics. At the same time, you've got the NYSE quietly building a venue for 24/7 trading of tokenized stocks and ETFs. Read that again. While markets are sliding, the rails for tokenized finance are being laid. That's the split screen most people miss. Price panicking, infrastructure advancing. You've also got Trump speaking at Davos tomorrow, world leaders listening, markets on edge. Because when geopolitics enters the driver's seat, algorithms stop pretending this is a normal commute. Now, let's talk structure. Bitcoin options traders are staring at one level like it's the last guardrail. 82,000. Above it, you get rebounds that feel violent, shorts trapped, fast money scrambling. Below it, that's when computers flip, trend funds sell, and price doesn't fall, it drops through thin air. This isn't a buy the dip market, this is a traction control market. And here's the real danger most people are ignoring. Late January, February, unlock season. High FDV tokens, low circulating supply, big cliffs of new coins hitting thin liquidity. That's like adding weight to the car right as the road turns icy. Doesn't matter how good the engine sounds, physics wins. Meanwhile, capital is doing what it always does in uncertain conditions. It's hiding in mass. Bitcoin, Ethereum, not because they're exciting, because they don't snap when stress hits the frame. Solana still looks fast, but stablecoin liquidity is leaking out. That's fuel leaving the tank. Less fuel means small bumps turn into hard crashes. Ethereum still holds the pipes, still holds the liquidity, still where institutions park when weather turns bad. Now zoom out one last time. AI demand is still climbing, compute is scarce, power is the bottleneck. That's why money is flowing into infrastructure while flashy narratives get repriced. The market trusts the engine room more than the body kit. So here's the garage rule tonight. When geopolitics mess with trade routes, slow down. When liquidity drains, know your exits. And when headlines get loud, watch structure, not emotion. If this breakdown helped you see the road clearer, smash the like. Hit follow, subscribe wherever you're watching. Because the garage doesn't sell hype. We tune engines, we spot traps, and we help you stay liquid while others blow transmissions chasing noise. Drop a comment with what you're watching this week. If it's real, it might make the next rundown. Engines hot, safety off, let it rip.